Several major U.S. banks gave a multi-billion-dollar lifeline to another regional bank that was at risk of failure. It came the same day Treasury Secretary Janet Yellen again tried to reassure Americans that our banking system is safe. Joining us now to break down what is going on here and what it means to our kitchen table economy is Darryl Rosen. He's a financial advisor and consultant at Brookstone Capital Management. Thanks so much for being with us. Appreciate it.
Thanks for having me.
So in very, very layman's terms, can you explain to folks who might be going to a St. Patrick's Day party today and are going to try to explain to folks, hey, I'm a pretty smart person, what happened with the banks this week? What do they need to know to kind of have an intelligent conversation around this?
Well, they have to have a good NCAA bracket as well.
And a Guinness in hand,
but
right, yeah.
When it comes to the banks, so, we understand that banks are in the business to take deposits in and to lend money out. And they make a spread. They try to make a little money on that endeavor. Mm-hmm. In this case, what happened with Silicon Valley Bank is that there was a run on the bank deposits, really more like a sprint, and it was very fueled by social media and Twitter and a lot of people talking about it. Ultimately, there were rumblings that there was something wrong. And there was a big run on money, so the government had to step in to help.
So we see Silicon Valley Bank, we see Signature Bank out of New York, nothing in the Chicagoland area. How might, if this were to exacerbate, how could the walls come in and maybe affect us here in the Midwest theoretically? What should we be keeping our eye out for?
Well, so when we put money in a bank, there's insurance, the Federal Deposit Insurance Corp. And so if you have $250,000 in the bank, anything above that technically is not insured if the bank goes under. It's an interesting question. I mean, Apple Computer has $48 billion in cash. And I know that there are a lot of businesses out there that have a lot of cash because they need cash in the bank for their operations. But for most normal people, I guess the one action step would be to not have more than $250,000 in the bank. But that's a lot of cash to have anyway. I think lay people have money in 401ks and their money is invested. So that they can, save for retirement and what have you. So far it's more a regional thing. Chris, the thing with Silicon Valley Bank is it was very tech oriented. It was maybe the big lesson for all of us normal people is differentiation. It's not putting all our eggs in one basket and maybe remaining calm.
All of this happened on the heels or during huge numbers of layoffs also in the tech industry. So you have those two kind of things working simultaneous to each other. So a lot of people are using the Wayback Machine saying, is this another 2008? Is this sort of a coupling of problems that's going to create a tidal wave that I need to be sort of really concerned about? Obviously, consumer confidence, how calm, how comfortable people are, is critical here. Is this 2008?
Well, 2008 was a whole different animal. So far, this does not seem like that. It seems more concentrated. 2008 affected everybody. And if you recall with the housing, and the mortgages, anybody could get a mortgage. You didn't even have to have decent credit. The sort of the loan to value ratio was all out of whack, and people were going crazy. And then what the banks were doing, and this had never really been done before, is they were packaging all these bad loans, and it really reverberated throughout the economy. It affected everybody. And so far, this seems a little more regional. I think for people watching your telecast, it's more about differentiating your investment strategies and maybe keeping less cash in one bank. But so far, I don't see any real good parallels.
We always end these interviews with what's next. And of course, the Fed meets next week, slated to hike interest rates again. I think if a lot of folks were thinking it'd be a quarter of a point. What is your sense here? What are we going to see next week, and where is this story going?
Well, I don't know what the Fed's going to do. My crystal ball is broken, but I know that they're going to meet, and whatever they say is going to kind of go through the financial markets. Inflation is really a great thorn right now, and I don't know if I'd want to be one of these Fed commissioners trying to figure out what to do. I can tell you what the financial markets think. The financial markets think by the fact that the market has gone up this week amid all this turmoil, is that maybe the Fed will say, look, we're going to pause a little bit, or at least we're going to do something that is not another big interest rate rise.
Try and cool the engine a little bit, as it were. Well, Darryl Rosen, thank you so much for walking us through what is a very complicated thing. We don't all live in the world of banks and interest rates and runs on money, so this is very, very helpful. I really appreciate it. Have a great St. Patrick's Day. Hope your bracket is doing well. We really appreciate it.
Okay, go Northwestern.
Amen to that.